Let's be real, not every trading day goes perfectly. You miss entries, price fakes you out, news hits out of nowhere, it happens. But even on my worst days, I have one setup that still manages to pay me. It's my last line of defense setup and is built around pure market logic. This setup is rooted in ICT principles. Specifically, it shows up after the market has already faked out the majority. Here's what it looks like. Price runs on liquidity usually before New York open. Then we get a displacement, structure break, and often a small fair value gap. If price pulls back into the fair value gap with confluence, I'm taking the trade, even if I already missed the earliest setup that day. This setup isn't about being perfect, it's about catching the real move. Even if you miss the first initial one, you can still catch the perfect move. There have been days where I lost this trade, then hit this setup and walked away with over 2R, calmly, no panic, just following the system. In this video, I'm going to show you one of those exact trades where the day started rough, but this setup came in and turned it all around. It's not about never having bad days, it's about having a setup that shows up anyway. Let's dive into it. So the beauty of this strategy is that it can make you tons of profit, it can help you pass a funded challenge, and it can help you succeed with a payout if you trade it correctly. So if you do want to know how to trade it correctly, be sure to watch all the way to the end of this video to get valuable insight that, most traders aren't willing to stay to the end of this video to collect. So be that lucky trader to get that valuable insight. So let's start with the PDF that we actually have, which is the trading session. We actively trade from 12 p.m. to 4 p.m. London time. Now this typically overlaps with the New York price action, and it's also to get moves in just before that New York session does start. The time frame we're using is the 15-minute time frame. It's going to be the chart for all trade setups, analysis, and execution. For the time zone note, we want to ensure that our trading platform reflects the London time, or we can adjust that accordingly. The setup criteria is sells only and is directional bias. We only look for short sell setups. Avoid taking long positions regardless of the structure. Market conditions, identify liquidity pools above recent highs, and we want to wait for price to sweep these liquidity points. We identify break of structures, and we also look for price to pull back into a 15-minute bearish order block or a 15-minute bearish fair value gap after the break of structure. So yeah, it's really simple. So if we were to actually sketch that out on the chart right here, you can see how price is doing exactly whatever it wants to before trading time. So the tricky thing is that we can have the setup happening before the trading time, and we could just get in at the trading time, or we could wait for the setup to form during the trading time. So let's say we have a market structure shift like this. And don't forget, if you guys wanted to pass and manage your funded challenge guarantee and get your payout, remember, you don't pay a single penny until you do get that payout. So click the first link in the description and we'll show you how hundreds of traders have successfully gotten a payout without ever paying a single penny up front. Again, you keep 70% of the profits and we take 30%. So as you can see here, we do have a market structure shift displaying right here. So if I just grab the highlighter right here, boom, we have a market structure shift. We have a liquidity sweep. And now we can say price is going to pull back into a 15-minute order block, which is somewhere within here. Yep. So as you can see, we're going to have the pullback just like this. Boom, 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 pull back. And then that's when it starts to distribute towards the downside super nicely. As you can see, we have a short position just like this. We could put our stop loss just above the high. That's a 7-pip stop loss. That's good. And what we can do is target 1 to 2R. Like, it's repeatable and it's easy. It works best. And I want you guys to try this for yourself. So with the 1 to 2R method, 1 to 2R is actually known as consistency in the markets. And as a trader who has been in the game for years and years on end and making over $150,000 a month, I think you guys should try this 1 to 2R method. It works extremely well. So if you stick at it, imagine just getting at least 3 1 to 2R trades a week, or maybe just 1 to 2R trades every day. That's not possible, but 1 to 2R trades a week, 3 1 to 2R trades a week is quite realistic. Yeah. Let's say we actually had the setup happening before the trading time, just like that. As you can see, we can still wait for price to then retrace. So if I grab the highlighter one more time, just like this, boom, we could look for the 15-minute order block, or we could just highlight the 15-minute fair value gap, which could be somewhere within here, right? Again, we're gonna wait for price to fill out that entire area, area of price action, and we're gonna put our stop loss just above the high, and we're gonna target a nice 1 to 2 risk to reward ratio. So as you can see at this point, we're targeting 1 to 2. I'm gonna let price do its thing, then it's gonna start to distribute once it's actually came back into our entry point. So what we're gonna do now, we're gonna get into some live chart examples which you guys can actually follow along with. So if I just turn up the brightness. So let's get into it. So you can see we're strictly on the 15-minute time frame, and actually let me just do this. I'll paste this this PDF in the description for you guys. I'll give it to you guys so you guys can actually use it, or you can just screenshot it on the screen. So I'll pause here so you can screenshot that. Boom. Now I'll pause here. You can screenshot that. Boom. And then the last bit, you can just screenshot that. Boom. Okay, cool. So let's get into it. And as you can see here, we have some nice price action going on, but let's see what does end up happening in the markets. So as you can see carefully, you can see, like I said, we have a liquidity sweep. Prior to that, we do end up having a market structure shift with displacement. So what we're going to do, we're going to wait for a 15-minute fair value gap to form. And as you can see, there's our 15-minute fair value gap. So right here, we have a 15-minute fair value gap where we can actually take our trade just like this. Boom. And what we're going to do, we're just going to cover the entire area. And for this, we can aim for a 10 pip stop loss. My maximum on stop losses is always 10 pips. Obviously, you just have to reduce your risk, so you're not risking too much, but 10 pip stop loss is completely fine. You can see 1 to 2 on that is about 20 pips. Now, what also makes this a high probability trade, if we were to grab a horizontal line and we were to draw from this section right here, you can see we have a liquidity point that can be taken, and lower than that, we do have this nice imbalance in the market right here that we can see price pushing in the future, taking out that liquidity, filling in any imbalances or anything of the sort. So you can see it does exactly that. It does break completely through. It does end up going much lower actually, which is perfect. That's what we want. So you can see price did end up dropping to about a 1 to 3.75 R, which is extremely good. Yeah, what we're gonna do, we're gonna get into the second example. So you can see right here we have example number 2. So again, we just want to make sense of everything that price is doing. So you can see we took a liquidity, then we had a market structure shift right here. So market structure shift, we took the liquidity on that high right here, then we formed a 15-minute order block. And it's usually the last opposing candle just before the move. What happens? Show position, put our stops just above the high. Or we could put our stops to the body right here, or 10 pips, that's fine. Let's actually decrease that a bit, so 7 pips. It's completely fine, because I'm looking at this fair value gap that we have right here that could potentially get filled, so we just want to be as careful as possible. And we target a 1 to 2 R, and yeah, that seems good. It's at an area with these liquidity points, and it needs to be taken. So let's see what price does end up doing. As you can see, it retraces. It takes out the liquidity points, and it does end up melting towards the downside, going to about 1 to 9 R, 66 pips. But yeah, if you guys did enjoy this, don't forget to like, comment, subscribe. I'll see you guys in the next one.